Hi all, and welcome to VLOG4 of Lake Effect Investments. My name is Amir. I run this channel where I talk about the stock market, the US stock market, the economy, economic factors, and a bunch of related stuff, as well as the stock market strategy that we're following over here, which I'll talk about in a minute. But please do take note of the disclaimer. Nothing here is investment advice. This is just me talking about what I'm doing and what I think the market is doing and what the economy is doing. So let's go ahead and get started with a market roundup, and then later on we'll get into some of the stocks that we've picked out and do a deep dive into one of those in the EV sector, as I talked about in Vlog 3. But first of all, a bit of a rough week for the markets. I think this may be the largest decline in quite some time. Most of the major indices are down, and this sharp downturn here on Friday was triggered by the biggest economic factor report that came out during the week, which is the employment or unemployment report. And even though the overall rate is consistent at 4.2% and still at a historic low, and overall good news, as it does help buttress the scenario that the economy is resilient and it's probably fundamentally doing a lot better than some of the fear anxieties out there. However, I think what spooked people and maybe created some more anxiety is that the rate of job growth versus redundancies. So you have not the number for the redundancies, but the jobs being added was much lower than the recent historic average. So past 12 months has been averaging around 202,000, now 142,000. So maybe that's pointing to a softening, and maybe that's pointing to further decrease in this stat, which could lead to recessionary trends. But that's kind of where the market is right now. There's a lot of anxiety and uncertainty around that. So these kind of triggers are going to be pretty typical. And then it leads to a sell-off, and it's the sell-off is probably more primarily driven by the fact that we're sitting on historical records for stock market valuations and growth, as you can see over this 5-year trend. And then if we look at the Mag 7, which we do quite a bit over here, the Magnificent Seven, which account for about $13 trillion of valuation in the NASDAQ. Pretty large concentration level. You'll see that pretty similar trend over here. A lot of the Mag 7 stocks came down quite a bit on Friday, from Tesla going down by almost 8.5%. As you can see, 4%, 3% kind of all over the place. Probably about a good 500 billion of valuation lost and stuff. So we're signaling that we could be entering some correction territory, perhaps a recession later on this year or first quarter of 25. That seems to be a lot of the media narratives. And then that, subsequently is leading to quite a bit of fear mongering and media narratives, stuff like stock market crash, recession, stuff is long overdue. We're sitting on historic highs, as well as some moderation in AI, which I think is a really good thing. That's pretty welcome. So pretty much as expected. And even though market's down, valuations are down, stock prices are down, it still overall seems like a positive thing. And also a lot of media attention on what the Fed's going to do in September with rate cuts. So something that it should be 50 basis points to kind of arrest any shocks that might come through further economic reports, especially unemployment. But I think an economic perspective, um, a moderate 25 basis points is still very much on the cards and still the more likely scenario, given that overall unemployment is still at a very good level and we're still getting GDP growth. And we also have other economic indicators like consumer confidence, which is also ticking up a little bit. But the bears are pretty loud these days. No doubt about that. And given all these bearish howls and about sell-offs and cash positions, here is some good advice, I would think, that I agree with from probably the greatest investor of all time, Mr. Warren
Have
Buffett.
cash around
Go
just to
with
have
it.
cash. I mean, we would never think that we should have a cash position of X%. And frankly, I think these asset allocation things that tacticians in Wall Street put out, about 60% stocks and 30%, we think that's total nonsense. So we want to have all our money working in decent businesses, but sometimes we can't find them, or sometimes cash comes in unexpectedly, or sometimes we sell something, and we have more cash around than we would like. And more cash around than we would like means that we have 10 or 15 cents around, because we want money employed, but we'll never employ it, just employ it. And you will find us quite unhappy over time if cash just keeps building up. And I think one way or another we'll find ways to use it. You may have trouble believing this, but Charlie and I never have an opinion about the market, because it wouldn't be any good, and it might interfere with the opinions we have that are good. If we're right about a business, if we think a business is attractive, it would be very foolish for us to not take action on that because we thought something about what the market was going to do, or anything of that sort.
I created the world's largest home security company. Today, I'm running the smart lock company Latch, a smaller...
Because we just don't know, and to give up something that you do know and that is profitable for something that you don't know and won't know because of that, it doesn't make any sense to us, and it doesn't really make any difference to us.
There's nothing magic. We like to put a lot of money in things that we feel strongly about, and that gets back to the diversification.
Okay. So yeah, if you're in the business of investing rather than trading, if you're a trader, maybe you want to, hold cash and you want to play on price points, ultra short-term price points. But if you're looking to hold for 6 months or 12 months or so, holding cash and being overly anxious about market scenarios and recessions and corrections and crashes, is not as relevant, and that's kind of what we're looking to do over here. So for those of you who may not be too familiar with the investment strategy over here, so we are looking at this small cap pricing trend, which is at a significant low over a significant period of time. And there are definitely people who are looking at this strategy in the market, and here's one. This is the Capital Group, so to speak, supposedly. And our own position is very much along that curve that you just saw. Go here. All right, enough for the Max 7. So this is kind of what we have over here. So I do have a new addition, which I'll talk about later. And as you can see, day gain and even that, weekly gain, we're not definitely following the Nasdaq. It's kind of doing its own thing, and these kind of weekly price movements are not very meaningful unless something fundamental has happened with one of these stocks. So the larger trend is kind of just what you just saw in this PowerPoint slide. Very, very similar. So we're looking at a pretty significant low price point over a 3 to 4 year period, and kind of expect this to maybe pick up when the market normalizes or looks to bring more attention and favor onto these small cap stocks. Perhaps once the kind of the Max 7 euphoria and the AI euphoria moderates itself a little bit. Okay. So in the last vlog, we did a review of the EV industry and kind of the outlook on that. And I talked about that we'll deep dive into one of these stocks Well, basically the only stock that I have in EV right now is Blink Charging. The others are all medical AI stocks, so we'll do that in a different video. But we'll take a look at Blink, and ever since we kind of charted off this portfolio on 15th of August, so I do have Akebia Therapeutics that I picked up on the 30th of August. But anyways, yeah, Blink is the only one, and kind of as I talked about last time, um, a view that I'm kind of looking at and kind of where I'm sitting on with right now is that um, specific EV makers, standalone EV makers, like, well, not Tesla. Tesla's in a different category, in a different class right now, but looking more at the startups like Rivian, like Lucid. The story there isn't as strong, as convincing. This will have a lot to do in terms of path to profitability. They're burning up a lot of cash. Market and current economic scenarios are not favorable right now. So if you want to pick up a specific EV maker, we can still wait and do that. But I'm kind of more sidestepping that and maybe looking at charging where I think the prospects may be a little bit better, as that is something that's a network and an industry that really is expected to expand exponentially, regardless of which EV makers succeed or fail. And that's not to mention that a charging startup cannot succeed, or I mean, cannot fail either. That can very much happen as well. But yeah, so let's do that. Let's get into Blink charging, and let's go to the EV and charging portfolio. All right. So I have a whole bunch of stocks here that I look at, I review, and I think it's a good part of the strategy or the overall idea of how to track this and what to look for and what not to look for. Is obviously to follow the industry news and industry media narratives, but also to look at companies that I've somehow, come by and they've flashed by and they've caught my eye for some reason or the other, and I've followed them and tracked them for a little while. Maybe I bought something, maybe I didn't, but um, for whatever reason, if there's something that doesn't interest me at all, I'll just drop it. But I do follow more companies within that industry, just to get a better sense of what's going on and what kind of issues and challenges and prospects all these different companies are coming across. All right, so Blink Charging obviously is going to have a very similar trajectory as to what the overall portfolio does. So had a peak valuation. I'm sure it issued a bunch of stock on the way, which would cause price dilution, as I've mentioned before. But we're definitely at a low price point, and even versus our August 15th purchase, we're at minus 24%. So this is one that's taken a beating. And it's, even though these are price movements which are not really relevant for medium to long-term investment strategies unless you're into short-term trading. But anytime price movements like this does happen, if it's like 30, 40-ish%, it's a good idea to take a look at it and try and figure out what's going on, difficult as that might be. With Butterfly, which is a medical stock, so we're not talking about that right now, but this one's gone up 74% versus the purchase price of 94 cents about a couple of weeks ago, 3 weeks ago. So I have looked around to see why that's happening. It just seems to be gaining favor with some investors, some funds, and stuff like that. But honestly, on a fundamental level, with reporting financial statements or any particular company prospects that would cause that, really haven't come across anything significant. It also may just be a correction as well, because Butterfly, let's go back, just like these other guys, is also at an all-time low, right? It's going to have a very similar curve. So yeah, It's a company that I've been tracking for quite some time, for almost 6 months. And you know, the, the price movements they happen, they go up and down in terms of sometimes what the overall market's doing, what the economic scenarios that are coming out, and how small companies sometimes expect to get squeezed with some unfavorable scenarios. But fundamentally speaking, if the price corrects itself, this is probably a more acceptable price than I would say 97 cents, maybe even more than this, right? I think that even at $2 a share, it would still be okay. And it's Butterfly. I don't want to harp too much on Butterfly, but if I take a quick look at it, come back to Blink. I think it's pretty favorable the last time I looked at it. That's what the analysts really say. By the way, the Nasdaq pages I find the best to look through this stuff as um, quickly and with some good summaries. So it's gonna tell you what the overall consensus is, strong buy, what the average um, target price is the next 12 months or so, and which analysts are covering that particular stock. So overall, it's got a strong buy recommendation and has pretty good fundamentals. So no reason why it may just not have a correction like that. So the pretty random stuff at this point in terms of which stocks are gonna see that and which ones are not. Um, but anyways, let's take a look at Blink. Okay, so let's take a look at Blink. Let's go ahead and get started with the income statement. So this is the 2Q24 release from about a few weeks ago. And over here we have the 6 months ending June 30th, 2023. So that's from a year ago. And then this is the most recent 6 months history. So you can see a pretty significant increase year over year in terms of revenue. And that's good. That means the product is working, it's getting out in the market, and people are buying it. And that is the biggest focus right now that analysts would have on companies of these kinds of profiles, startups, disruptive industries, looking to make their mark and looking to get settled in the industry, is that they have a product and the product is making it to market. However, if you look at just the 3 months, right? So that's just the 3 months, second quarter 23 versus second quarter 24. The revenues are flat, right? So that's also indicative of the slowdown, the overall slowdown in the economy and the EV industry. And then here you have cost of revenue. So that is the actual cost of producing those revenues of the product. So it's going to be stuff like materials and stuff that's directly involved in producing the product. And that has gone up. So that would definitely be a question as to what's going on over there. But, I won't say it's that significant. It can also be things like accounting and adjustments and corrections from previous time periods. Could be material costs, could be something else. So definitely something to worth keeping an eye on. So this is your gross profit, which is just your total revenues minus your cost of goods sold. It's also known as, and then you look at your operation expenses like compensation, executive, administration, execution, stuff like that. And well, we definitely see compensation coming down significantly year over year, 6 month period and then 3 month period. That's hopefully a good thing because the price of the stock is much lower. So the return on investors is definitely down, and people who invested in these stocks a year ago, a couple of years ago, are sitting on a substantial negative position. So that should be reflected in the compensation of the business manager and the business managers. At the same time, you do want to keep people well incentivized to to produce the product and to make this a good success story. So definitely a couple of things to keep your eye on. But yeah, the overall trend, in terms of path to profitability is that the company does seem to be focused on that. And they're improving their margin, not their margin, which is the revenue minus cost of goods sold, but they're improving their revenue, and they seem to be taking have a good eye on their costs and their profit or loss from operations before all this other stuff like interest expense, financial income from non-operations and other stuff, taxes, deferred assets, all that happens. We want to look at these lines as the truer indicators of the core business performance. So I think that's probably at a healthy trend right now. And that's probably what's leading some of these more positive um, narratives around Blink charging. So I mean, I always want to look for negative news on the company, especially when there has been positive media coverage. And there's more of that. It's like, what you're missing out on or what you're not um, able to discover in terms of issues and challenges. I'm sure they have their fair share of that. But overall, it is positive. And here you have a media narrative on why this stock should be a good buy. And it basically is that there's an emphasis on the exact the same thing is that the earnings before interest and taxes and deferred assets, that stuff is in a positive trend. So these stocks are trending towards break even, and if they achieve break even, the market should look at that favorably. And then if you go through the management um, conference call and transcript for the second quarter earnings, the kind of stuff that I would be looking for is how are they positioning themselves, what kind of initiatives that they're taking, what their view of the market and its expansion is, and how involved are they in the evolution of the market. So I think it checks off those boxes. You can go through the stuff, and there's stuff here like, for example, um, expansion into Europe, into Belgium, winning a contract with Decathlon, the world's largest sporting goods retailer, and they're going to be installing a whole bunch of L2 and DC fast chargers. And there's other initiatives that they're doing in the US. That's the kind of stuff that I do want to see coming from them, is that they're involved and they have initiatives going on, and they kind of have a good sense of the market, and they know what the right initiatives are. And as far as the overall industry outlook goes, yeah, they're all going to be booting that, right? That we're part of a high growth industry. And because the industry is expected to grow to $260 billion by 2030, definitely bodes well for the company, given everything else um, is normal and business as usual. The industry narrative, I'm not going to harp on too much because it is what it is. Everybody does expect EV to grow significantly, and here's a media narrative that it's not growing as fast as it needs to grow. I think definitely to support the expected EV expansion, more and more electric vehicles getting on the road and coming out, we are definitely going to need a much, much more robust, quicker, faster, and much larger scaled up network structure. So that's another check, another box that this stock seems to check pretty well. So, it is down a little bit, but again, this is very short term. And there's a lot of market anxiety around the current scenario of the EV industry, which is slowing down quite a bit after rapid expansion over the past few years, which is what I cover in more detail in VLOG4. So you can check that out if you'd like to. Um, but yeah, I don't think there's a whole lot more that I want to say about Blank. Here's a nice page with some good summary information. So has a consensus buy from a bunch of analysts. It's covered by good analysts. That's in good names as well as in I think a large number of analysts. I don't usually see that too much with these stock profiles, but this one definitely is covered by a pretty wide spectrum. Um, so nothing too concerning over there. And I think actually what it all seems to be pointing to is whatever's going on over here, speculators, traders, short sellers, stuff like that. Um, it's a pricing dip, and probably warrants um, to buying the dip and improving the position and reducing your average cost for playing. So I don't know, pretty strongly thinking about maybe adding a little bit more to this position since that's fairly lower than where it was on August 15th. But yeah, um, I think I think I'm done here, and I probably am coming up if I haven't really exceeded my time limit again. And we'll close this out, and maybe next time we'll take a look at this guy here, which I've been looking at for quite some time. Seem to like that, and it's at a pretty good pricing point. It's a company that produces chips, I think semiconductors, and some other materials for EVs. So it's definitely tied out with the EV industry and with EV with the vehicles themselves, as well as with data centers. So it seems to have some diversification in its client base as well and its industry base. It seems to be tied in with some high growth industries out there, and stock seems to have a pretty good profile. So we'll take a look at that maybe next time, and then eventually I think I'll also talk about, or maybe subsequently, the hydrogen fuel industry, which I've been cracking and looking at for some time, and cracking some stocks in that area as well. It's kind of since it's related to green economy, green energy, green fuels, yada yada yada. Yeah. Okay. Well, we'll wrap it up for now. And see you guys next time.